Welcome everyone. My name is Ripul Dutt, and today we have Biswarupa Mohapatra with us, who is an experienced credit risk professional. So, welcome.
Thank you so much. Thank you so much, Ripple, for inviting me on this podcast of Riskin. And I'm so delighted. I'm so glad. I'm so excited at the same time to be here and to share my experience with you that has been expected. And yes, I'm doing great. And I'm looking forward to give lot of like my to talk about my experiences that I have gathered so far. And let's take it ahead.
Yeah, for sure. So, just for everyone, Biswarupa is an experienced credit risk professional, and it is really great to learn about her journey, and we'll be discussing that coming all the way, um, from college to getting into retail banking to getting into big four, then getting into credit risk and getting really excited and involved in a specific domain within credit risk that we will discuss further. So, to get started, can you please share a little bit about your background in academics, and how did you get start your career journey in finance and risk?
Okay. So basically, my background is I have done engineering as part of graduation. After that, I did MBA in finance and IT, dual specialization. So I was somehow inclined to numbers. I didn't have much idea whether my industry is going to be banking, finance, or whatever. But then numbers was something that was in my head, and so invariably I started thinking about the banking industry, how does it work, and so I started thinking more about that, and that very repeated thinking and more concentration towards that pulled me to the banking industry in the
Okay.
very first place. Okay. And during the campus placement I sat for a couple of companies, but I at the end I got selected for one of the nationalized bank. So there,
Okay.
from there started my journey to banking and finance industry.
Okay, great. So, what was the most exciting thing when you joined banking?
Okay. So I joined in a retail branch banking operations. It was a newly formed batch back then. It was in a rural part of Bangalore, and I had to travel daily, up on both the sides. I had to commute for close to 3 hours in the busy traffic time. And in the beginning days it was all it went well, and I was just learning the things from the seniors and from the colleagues around. And as the days started passing, then I started getting the feel of heat. I had to take the the operations of the branch, and also I had to do the sales, because the revenue comes like at the top of everything. What you are doing, how much revenue you are generating, whatever, like you take any assets or liability of the branch, but at the end of the day you have to show how this much of revenue you have generated as an employee of the branch, as a
Yeah.
responsible employee of the bank. So that was something. Then I started feeling, okay, I have to also contribute, I have to also perform, and I have to give my part of contribution at the end of the month. So that's how even I can show it to my reporting manager, boss, this much I have done. And then after like 6 to 7 months I started I felt like, okay, now it is getting too much, like the area is very limited over here. And then I started delving little, I mean going little deeper, what else can I do, so that, because even I was looking ahead, like how long shall I be doing like this, long shall I be doing or involved in this, like perform, like sitting sometime in the cash department, or doing some handling some operations, or approaching the front end customers to bring and getting the business. So that was all fine, but then what else, what is going to be the next step? 1 year got over with a blink of an eye, but then what next? 1.5 year also went, because it was a newly formed branch. Definitely it gave me a added advantage, because I got to know different many different things inside the
Yeah.
branch. Yeah. Then also the branch was acquiring few clients like MSME, medium, small,
Yeah, yeah,
micro,
yeah.
small, medium enterprises for the for giving the loan. So from there, I came across my first footstep inside the credit. I got to know, okay, so that
Okay,
forms the biggest asset of
okay.
the bank or the branch
So that
institution.
was the introduction to the term
Correct.
credit, right? The loans, and so that's the
Loans.
basics, right? So yeah, that's really interesting. So you just stumbled upon something that then really seemed to be interesting to you. So how from there you went to credit risk, right? How did you learn about like the risk management positions that exist? What is required for those positions? Like, what did you do after learning about credit?
That is a great question, Ripple. This question, keeps running inside my mind all the time because even
Okay.
I get such, at times I get those questions, that particular question from juniors also. So it
Yeah.
is like, it happened in a phase-wise manner. First, I got accustomed to to the branch banking operations, and within one year or so, I got I was like, okay, I'm done with this thing. What next? Then I came across the MSME loan part when the
Yeah.
branch invited to those clients to our branch, and because the branch wanted to increase the revenue. Then I came
Yeah.
across the credit part of the bank. Then after that, like, I was also looking for, because that time I remember it was the year 2009 when that recession was going on. Okay,
Yeah.
badly
Yeah.
it
Yeah.
was all over, like across the globe. It was recession because of the Goldman
Yeah.
Sachs thing. It was
Yeah.
going on, and nothing was happening. Nothing much was happening around. And then I started. I said, "What next should I be doing? And shall I be, because if I'll be looking forward for MNC banks or things, then how should I portray? What should I add into my CV? What else should I learn or gain and talk about, so that even I should be sounding kind of little bit at least inclined towards those requirements that
Yeah. Yeah.
MNC banks or investment
Great.
banks
Yeah.
they do
Yeah.
have. So from there, then I started asking questions to my seniors, those who had little bit of background to IT industries, and
Okay.
also to like on LinkedIn also, here and there I started
Yeah.
checking.
Always works. Yeah.
And whomever I started, some other link, I started pitching them
Okay.
with a little bit of idea. I here and there I got some idea. Then I started to reverse engineer those things. How, like, I started to link, this is what is market requirement for the MNC bank or investment bank with
Yeah.
respect to the
Yeah.
credit risk, and then this is what I have gathered at past part of retail batch banking. Okay.
That's a great
Okay.
strategy.
So
Yeah. Yeah.
what is that missing link? What is that
Yeah.
link that I can bring forth, that I can write on my CV? Not only
Yeah.
that the same thing I can also talk about.
Yeah.
Because unless and until I'll talk about it, nobody is going to, everybody else can, write on the CV and give it to
Yeah.
the employer. It doesn't work that way. So I had to talk about that. Okay. So I was pitching to the client of the MSME. Not only that, I was looking at their balance sheet or P&L, like snapshot of their financials, and then was doing kind of, I was working at the working beside the senior loan professionals, and I was
Okay.
helping them out in terms of figuring out how their historical performance, if they are the old clients, and how we can kind of extrapolate them, and so kind of, so I tried to put those things into my CV. And from there I started kind of like after 1 year or so, I mean, when the this recession thing started getting settled, I started kind of getting calls, but till that time I was not getting any call related to what I was aspiring to. And then when I started getting calls, and then one fine day when I got from one of the KPO it was, and
Yeah.
then I got into the one of the KPO, and then I joined their wholesale lending operations. So that was from retail branch banking. I joined to KPO, which is like a MNC, their Indian setup in Bangalore location.
Understood, understood. And that is where, basically the risk management aspects were better leveraged in your profile, right?
Yes,
Okay.
yes.
So while and how much time did you work there for?
Where in my second organization.
Yes, in the second one, yeah.
So when I joined my second organization, the department was wholesale lending operation, where we were working like looking after the corporate and institutional clients for Asia Pac. Later, it got extended to UK and US clients as well. So there, I have worked for 4 years.
Understood.
Yes.
So during these 4 years, did you used to hear, about FRM, CFA, or or the opportunities that are at the Big Four organizations? Because that's where you transition to Big Four organizations, right? So I just want to know, within these 4 years, what were the turning ideas, the turning points, where you were motivated to explore further, and keep progressing in your career and trying what's best for you and your skill set, while also you are you also upgrading your skill sets while you are working, getting hands-on experience and all. So just how was that transition within the 4 year
Okay.
period?
Okay. So that was the time. It was for the from the year, sorry, tentatively from July 2010 till 2014, July or
Okay.
August. So those
Okay.
4 years, and I was not aware of. I had never not heard of FRM or CFA by that time.
Yeah.
To be
Yeah.
frank, I had not heard, but I am like like as the years passed, like 1 to 2 years, I started come because the organization also had a in-house strong in-house training department. Those because I showed interest to learn more about how
Yeah.
uh, kind of like because we were backing up to the investment bankers sitting in
Okay.
different locations. So I wanted
Okay.
to know how they were pitching, what sort of thing, because we were answerable to the investment bankers, like
Okay.
because whatever outputs we were giving in terms of our ratio calculations, credit rating, or our qualitative analysis, we were answerable for that. So I wanted to know, like, because they were ultimately doing the pitching from the bank side to the client. So like as per my interest, like what next because I already became like one of the SME subject matter expert, and I wanted to know like how we can move, how we can keep ourselves in the shoes of the investment bankers and think from their perspective, so that the time will be reduced, like because even at times or many a times even we do mistakes as part of while doing the
Yeah.
work.
Yeah.
So that the time will be reduced to, I mean, there will be no back and forth multiple times things happen, and
Yeah.
that way the time can be managed, because sometimes it has dragged, and things have gone beyond our hands. So that way I had taken couple of, along with my other teammates, I had taken some trainings on with respect to kind of like this respect with respect to credit risk, and
Okay.
also some this quality measure, how to maintain the quality of the report that you are making, or
Okay.
the quality of work that you are delivering, like
Okay.
Pareto analysis. So such kind of things we started
How
taking.
much how much is that, like the quality assurance part, like how much did it start mattering as you transition more to risk role? Did it
Mhm.
become, like you mentioned this, that this was one of the things that must have been like something that you saw that this is required a lot more right now? Do you think this was one of the key things, like making sure the quality of the outputs or the models or anything else? Was that something that you saw progress towards becoming even more intensive within your work as you move to risk management?
Yes, because the
Okay.
so in terms of when I talk about quality of work, because in our work, it was like how many errors we were making. Like in if in
Yeah. Yeah.
Asia Pac, it will be something like, let's say for example, in some item of the balance sheet or financial statement will be considered under this, whereas when it come to UK client, it is not the same. So we cannot streamline
Yeah.
everything in
Okay.
one set of Excel file or so. So we had to put one beside another, and we had to refer them back for, like, if I need to keep it in my mind that I'm working for this client, so I need to go back to that particular sheet, and I need to look at that and not this or anything else. So likewise, we
Yeah.
had to divide the team in between different regions and different zones, and then we had to work for that so that the error rates can be reduced and also the work becomes faster.
Understood. Understood. Okay. So, like you mentioned to me, while we were planning this discussion out, then you had opportunities at Credit Suisse and also KPMG. Just want to know, how that journey started. How did you find the opportunities? How challenging was it?
Mm-hmm.
What helped you? We I'm sure that all the audience is really looking forward to know all the little intricacies of the process, and how to best be prepared for getting on a journey that you have already traversed, right? So please share a little bit along those lines.
Okay, sure. So it is like from KPO to like NZ Support Services, which was the KPO I was talking about earlier. So from there to Credit Suisse, like when I got relocated to another metro city, so I had to quit my job, the other job in the year 2014. Then I had to locate in the new city, Pune. So that time, so during that time, I started doing, I took a small course on financial modeling, DCA valuation, and it was kind
Okay.
of related and similar to what I was doing earlier. Credit risk I was doing, modeling I was doing, like forecasting, projection, bad, like
Okay.
worst case,
Okay.
best case I was anyway doing. But then when I did financial modeling, I got to understand how or what it, by keeping what in mind we do all those things. I was
Yeah.
doing that, that was part of my job. But when I started doing practically, like by taking the historical financial of any particular company, of an industry, and then doing the ratios not just for that particular current year but for the past 4 years, and then projecting it by considering a percentage of amount for the rest of the things, then I started getting a clear picture of the, okay, so this is the way how whom I was reporting, whom I was backing in my last organization, they think from that aspect. So whatever question
Okay.
I was looking at there,
Yeah.
so I got my answer over here when I did it myself.
Okay. Great. Great. Yeah. That's
And I
actually great.
mentioned that very course on my CV, and then I started getting, not on that basis, but then definitely it got, like it added a good value to my CV, whatever I had already worked on, and I got into Credit Suisse.
So basically, it was a combination of your retail banking experience, and then you moved on to another opportunity which had more of the risk aspects.
Yes.
Alongside, you had supplemented with some financial modeling course
Yes.
that gave kind of a credibility, or you can say a trust to the hiring managers in your CV, that there is experience, but there is also a hands-on implementation
Yes.
learning, I would say.
Yeah.
And this is how you pitched your profile to the big four organizations, right? So at
Yes.
Credit Suisse, basically, when you got the call for the interview, I mean, do you mind like sharing what was the thing that you realized during the interview, that it is so great that I knew this, or maybe I studied this? What was something that really worked for you in the interview? I really want to know that.
Okay. So I got to hear and know the question that you are asking, the answer I got to hear when I got inside the company from a manager, because when he was talking to his boss, he said that the my teams, whomever I have selected, like hand counted numbers, those all of them are from kind of investment banks, and they have done some good financial modeling courses. They have
Sure.
got a hands-on exposure of handling to the international clients, so they are
Yeah.
pretty confident on whatever they have already done. So I am confident that they should be able to, because I joined Credit Suisse as a senior risk consultant. I had to
Okay.
handle to the stakeholders, like another different, like couple of, like mainly US clients were there. So I had
Okay.
to, along with the team, as a team member, I had to look after them. So the manager said that, so all my team members, like it was a big team, 10 to 12 people were there. So all my team members, they are well equipped with whatever was expected. So the course, the financial modeling course, and also the prior experience of handling to the like other zones, time zone clients also added to the, because they had that, they built, they had that in mind that okay, if she has worked on that, she has worked for such an extended period of 4 years and worked over there, she has she's carrying that kind of experience, and she has like she has also performed in the interview and cracked that, so she will be, and it is very much expected, and we can expect that she should be able to do whatever is being asked over here too.
Okay, okay, okay. Understood. And so, what was your first project when you joined? Can you share a little bit of details? Not going into the intricacies, but just an overview of what the project was solving for.
So it was based on credit risk only, and there were like parameters, like I came across like Basel norms, because the projects over there in Credit Suisse were
Yeah.
based on mainly this Basel 3 approach that time it was, and probability of default, loss given default, all those matrices were involved, and so also the credit rating and couple of key ratios. So on the basis
Okay.
of which we had to do the analysis. So it was like the projects that I had worked on, it was mainly how the business can capture the clients who are happy, because there were many clients, like corporate clients, obviously, who had been defaulted for a longer time, like maybe little more than 1 year or 2 years. So our job was to create a like by using Tableau, we had to create a like technical platform where the clients default, the whenever the client will be defaulting, how it can be captured within no time, or within very less time. So that was the whole idea behind. And not just that, we had to also give very much valid reasons after, even after getting signed off from the other stakeholders and preparing the technical deck and everything, after giving the UAT, doing UAT and everything, we had to
Yeah.
convince to the business also, because business cannot because that time I remember for one of the projects, for this very first project, business was not buying whatever we were trying to convince. No, here, if what if the client will kind of will not go this way, or if you will not be, if this platform will show some default, or if the red flag will not appear at the right time. So that was very kind of tough time for us as like the product, you can say, I mean product owners, like because we were business consultants, we had to convince to the business, okay, so this is going to work, because we have studied the clients background, and whatever data was given to us, because as business consultant we had to deal with a lot of data. So, and we were like, we had not only worked on these many data which were given, we had also pulled out from the database, and we have seen the behavior for this many years. And so we have done our homework, and we also took the we got involved with the other stakeholders. We have taken their suggestions and we have worked together, and we have done these many use cases and stories we have come up with. So we are hopeful, we are very much confident that it should work the way it is expected.
Okay, great. And then so basically, as your journey progressed over there, then you eventually moved on to KPMG,
Yes.
right?
Again, another short break was there in between because of some, I do not remember. But then again, I joined Credit Suisse. That for a short stint of 6 months. There, I got exposure to counterparty credit risk.
Okay, so you got exposure to the counterparty credit risk,
Mm.
and then you moved to
To
KPMG. Is that
KPMG.
correct?
Correct.
So
Yes.
the role that you had at KPMG is basically more towards counterparty credit risk. So this is how the journey went from retail banking. Then you get into credit risk,
Hmm.
learn about all the due diligence, financial modeling, everything else, and then you move towards counterparty credit risk within Credit Suisse still, and then using that experience, or I think your expertise that you were developing in counterparty credit risk, that brought you to KPMG. Is that
Yes.
correct?
Yes.
Okay. So please, please share, when you were exposed to counterparty credit risk specifically, like how did you get into it, so much that it became one of your expertise, and then you went on to explore a role within counterparty credit risk at at a different organization. I just want to understand that.
Okay, so I got more attached to counterparty credit risk because I mean I feel that okay, we all know that credit risk is a bigger umbrella, but when it comes to counterparty credit risk, it is a small part within that bigger umbrella. And I thought, okay, let me, because I already got to know. I mean, it is just the loan exposure that we were dealing with when it came to credit risk, but when it came to counterparty credit risk, so it was something, it was a new area for me. And there came the derivatives, swaps, options, and then forex instruments where we had to calculate the exposures for them. And also it was not because I had the idea that collateral is only associated with the, when it comes to creditors, when somebody, I am taking a loan, I am putting something as collateral so that I can get the easy access to my loan at, on the say, given time or whatever. But when it came to counterparty credit risk, it was completely a all those terms were there, even more new terms were there. And also it, more than that, it was a market linked product. It was not like when you are taking or I am taking a loan as an individual, our loan will remain the same till the date we will be repaying it. Forget about interest rate. But
Yeah.
when it is linked to, or when it comes to counterparty credit risk, when it is derivative like swaps, irrespective of the type of instrument it is, then the loan amount is not going to remain the same. The exposure is going to vary throughout the life of till the time you will be repaying it, because it is a market linked product.
Okay.
So that
Yeah.
caught my attention, and also I could see it has got a you know kind of broader aspect to to stay involved. And also it gave me a lot of like a very inquisitiveness, like okay, how it is going to, how the exposure is going to be calculated. Then in PD I got to see a relationship what I had already worked on, because in probability of default we anyway we take the credit rating and how is the performance. So it was kind of what I had already worked on, some of the key ratios we took, and on the basis of which we come up with the probability of default. Then loss given default, again it is like the collateral amount will be
Yeah.
considered, recovery rate, and then by subtracting it we come up with the loss given
Yeah.
default,
Yeah.
and then the comes the exposure at default when the client will go for the defaulter. So it was like it is, nothing is fixed here. You have to do, you have to see the movement of the instrument, how the client
Yeah.
is how the derivative product is performing on the base. So
Yeah.
it is very dynamic, I'll rather say.
And you like this really much because you are going more and more towards from credit risk to credit risk modeling, and then you go into deeper aspects of it, and then So when your project started at KPMG, right? So how was this project structured? Like you are working for a client, and what were the deliverables and expectations? Like just sense of a day to day life. While having the skill sets, the valuable skill sets that you have developed. How does it go on a daily basis? How many meetings you have, with your own team or with the client, and what are the timelines around the projects? Just a little bit more about that too, so the audience can get a sense of what it's like working
Okay,
on
okay.
a
Yeah.
project.
Mm-hmm. So when it is like when I started working with the client of KPMG, it
Yeah.
was like because it was a UK client in the beginning, and
O-
our meeting starts at the start of in the first hour, like at around 1 o'clock or by 1:30, just
Okay.
before lunch or just after the lunch, and they will explain us whatever is been. And there, I mean, I remember in the project, in that first project that I dealt in the with KPMG, it was like you will get all sorts of parameter or the matrices that we get to see in any counterparty credit risk. Like you will find the probability of default, you will get a wrong way risk, right way risk, and then mark to market value. All those,
Yeah.
there will be close to 30 to 40 parameters, like in a single
Yeah.
Excel sheets, all with all the detail, their day-to-day values and all those matrices. So you have to go through that, and it is like I didn't need to, or the team where I was working, we didn't need to calculate anything, but we had to
Okay.
analyze. We had how
So who
for a
is who is
particular product,
calculating? Who is calculating?
we had been given all the data. We
Okay.
had been given all the data, but then yeah, like inside the same project, not all, like every time we had to see how is the variance, to put it straight,
Okay.
like q so we were calculating the QOQ analysis we are doing, uh, Q1 by Q2 multiplied by
Yeah.
100. So it is like variance
Yeah.
analysis, QOQ analysis, so that we'll get to say how much is the variation, how much is the percentage change from last quarter to this quarter.
So it's mostly your team's role is basically, if I have to say, looking at the data and finding patterns, careful data analysis.
Yes,
Uh,
yes.
and what were the key questions you were, looking at that data for? Like, there must be certain, just a little bit about what kind of patterns you are looking for. What is the client's ask? Can you explain a little bit about that?
So it was more of like data governance, I will say.
Okay.
You have to see like how much valid the data stand for vis-a-vis whatever figure
Okay.
they were throwing. Okay, it is
Okay.
not like whatever data they will be giving at the SharePoint we will take and we'll start the analysis. No, we will go back to their technical team, and not technical, their financial team, because there are two sets of data that comes. We
Okay.
were also doing, first job was to do the reconciliation. Two sets of
Okay.
data. First set was coming from their financial team. Second was
Okay.
coming from their operation team. Okay.
Okay. Okay.
And not necessary that both the sets of data are going to be the same. So that was the crux. Like if like we had to figure out, we had to come up with our own table, and we had to put the copy paste the first Excel sheet existing data, and the other data set that was coming from the financial team, it used to come in the PDF. So we
Okay.
had to take it to the our own worksheet in the Excel sheet. Then we had to compare, maybe like is equal to or whatever, by using whatever
Yeah.
Excel function we had to see. So whichever metrics or whichever data it was not falling in line, we had to go back to the finance team. Why there is a discrepancy? What
Okay.
caused the
Okay.
discrepancy?
Okay.
And then
Okay.
after getting the reason, the rationale behind, then we were going for doing the variance analysis.
Understood. Understood. And so while at this opportunity, how frequently your project or your role change, or in a typical setup, like when you're working on a certain, like this is one part, part of the many projects that you have done. So for how a typical project goes on for how long, uh, you know?
So my first project was for very short duration. It was for 3 months, but the second one was for 6 months.
Okay. So it depends. It really depends
Yeah, it
on the.
depends. Yes.
Okay.
Yeah, it depends. Sometimes
And
it got stretched also. It
yeah,
goes beyond 1 year also for some. Like I have seen for my colleagues over there, it gets stretched depending on the client's requirement, kind of.
understood. So can I ask just one question that is coming to my mind now? So coming from retail banking, then Credit Suisse, then KPMG. Where did you like working the most? If you want to, share that, or what is something that you liked at each place? What was your biggest takeaway from each place that helped you, advance your career and also develop a better understanding of, what you like to pursue professionally and where you want to make the most impact within risk management?
Okay, so I would like to go for the second one rather than
Okay.
where
Yeah.
I like the most. But I would like to say, like, from which all companies, what all were my biggest takeaways.
Yeah.
Like
Yeah.
from my
Great.
last
Great. Yeah.
organization, KPMG, I liked the idea that I didn't keep myself restricted with respect to any particular client for the entire
Okay.
period. So I got exposure to different clients. So on that way, I got to know like how the client was working, how was their exact need, and I had to mold myself in that way. It was not like I went with this mindset, I this is what my expertise or this is what I carry with me, I will work on this, I'll keep my, no, it's not like that. When we were working for somebody, we have to keep ourselves kind of open or flexible as per what they demand or whatever they expect. So that is the best thing that I liked, and I would like to say also very delightfully that we all should be possessing that mindset that we should be flexible enough to work with different clients,
Yeah.
because we should not be taking something this as something against us, but this is a blessing in disguise, I must say.
Why?
We
How is that? So you are working with different kinds of clients. So it's like you are getting exposure to what are the different kind of setups, what are the different kind of challenges, and in the
Yes,
long run, that will be really, really beneficial if you are aiming. Obviously, you've started your career. You want to go to director, partner level, so get exposure to all kinds of things as fast as possible. Is that correct?
correct. Yes, yes, very much true, very much
Okay,
true.
so great. So that's KPMG. What about the other two?
So Credit Suisse also, like Credit Suisse, it was like more of business analyst role, and I got more into technical aspect. So
Okay.
which was another wing of my career, I would say, because credit risk, counterparty credits, all were like hardcore finance. But when it comes
Yeah.
to business analyst role, then it is like giving or putting a technical angle to your whatever you have learned in. As a finance professional or as a credit risk professional. So there it is, my key takeaway is like, because I was not very conversant to kind of getting into too much deep into technology, like how to implement that, even
Yeah.
though we had separate segregated like functional inside BA team also, we had functional and we had technical
Yeah.
team. But then I got to sit with the technical team and I could understand how they were making the mock-ups using Tableau. And the same thing happened with KPMG also. It was not like I got to know and learn Alteryx, because when we didn't have any work, we used to sit together like virtually, and we whoever had that particular idea or that particular skill set, they used to teach. So that's how the sharing things happen, and we do not feel something like in the next client case or whatever, in the next project when it comes, we do not feel like we have come something, we have stepped into something that we had no idea in. So that is something. So in my last to last company with Credit Suisse, when I worked as a business analyst, so that was my takeaway. I should keep myself.
Okay. Okay. That's great, actually. See, one question I have there is, especially for aspirants who are looking to get into risk management, when people
Mhm.
hear about business analyst, I know that, there are a lot of people in our risk community also, who have been business analyst. Now, what how is this business analysis complementing the risk management? Because there are business analysts in other fields as well. Like there are data analysts. Then there are who also incline towards business end of things, looking at the P&L and all those things. Many startups have business analysts too, and so what specific kind of the business aspect, when you say business analysis, I am trying to understand how is that complementing or supplementing the risk analysis, if that question makes sense. I think that will be a really really good learning to hear in your own words, how those two relate or complement or supplement.
Okay,
uh,
okay.
no.
So when like we as credit professionals, when we step into any business analysis setup, so it happens like this: we become the subject matter expert with respect to credit risk. Now we will
Okay.
help with our knowledge base, that is credit risk management. We will help the business whose business is to deliver to their clients like risk in risk aspect, like because let's say for example I am working for Credit Suisse, who is giving what like the its clients the loans, and now the bank has to safeguard its skin, whatever loan,
Okay.
because they give loans in 100 million, 200 million, 500 million US dollars. Now
Yeah.
they want to, because it is not somebody or a setup or a group of people or a team or multiple teams there who will be sitting across all the time and who will be safeguarding their money. No, they have to have a system in place who which will be working on behalf of them. Even if there will be a team or there will be multiple teams, but then there has to be a streamlined system. And so we along with the technical team, we will be working together to come up with a platform, and which will be running and working at the back of the credit department of those of the Credit Suisse bank, and that will be giving to the business the required output, that is how it can maintain a minimum capital or adequate capital, or how it will kind of get to know the defaulters well in advance so that it will not lose much of its money, kind of things, small small examples. So we will be sitting with the this system guys, and we will be working together to deliver to the business how it will save the bank uh, to so, to come out
Okay.
of any unforeseen loss in the future. So that is the idea.
Understood.
I
Understood.
hope I could answer.
Yes, yes, yes. No, no, that makes sense actually. That is something that I was looking for. Now there is a, because you gave an example. Now it's easier to relate in, and for the audience as well, right? I know that there are many people who would find value in this answer. It Everything is clear for me. Yeah, thanks. So moving on to the first opportunity where we were, KPMG, Credit Suisse. In the first opportunity, what was the most exciting, most beneficial learning for you?
Okay, in my first job,
Yeah.
in my first job, it was like I could face my clients directly on face. I was not
Okay.
sitting or interacting with the system
Okay.
from 9 to
Okay.
5, but I was facing to them. I was listening to them. I was handling their queries. I was also handing over their products, whatever it is. And I was explaining them by using pen and paper. So I
Yeah.
was serving them directly.
Okay. So I think, did you like it, or would you have preferred if there is,
Okay.
like I'm sure in right now, a face-to-face interactions are probably not that many emails or calls. So there must be certain aspects you liked, right, about that. I just want to hear about that.
Okay, yeah, like initial days I was okay, but later I feel now it is time for me to move to the other side. So That's what I
Yeah.
was telling. No, yeah. For some days I was okay till the time I was feeling okay. I'm still at a learning stage. I should be knowing this. I should be
Yeah.
knowing that. I should be having. I should be getting this much of kind of thing before I switch on. So till that time I enjoyed. I put my head and mind everything inside. But then at some point even I thought, okay, now it's time to.
Great. So from what I'm getting is the first opportunity is where you had, you were in the same physical space as the client face to face. In the second opportunity, you are looking at the, business aspects as a business analyst. And in the third opportunity, you really got the exposure of working on multiple projects with multiple stakeholders,
Yes.
solving a variety of problems. So it's like, I can see, how these opportunities, how they were aligned. They could not have been a better, I think, sequence, right? I think that's a good trajectory. So what I'm trying to understand from this is that, the viewers who are anywhere on this trajectory, and they want to move ahead, towards the core risk management role, they could follow the pathway that you have followed, right? I want to know, that what are the top, I would say, working style, or I don't know if you have any recommendation for the viewers for how to approach a professional setup, any work ethic feedback, what has helped you maintain good relations with clients, with your with your team, uh, overcoming challenges. What's your general advice for viewers?
Okay. So my first thing, I mean, which even I didn't learn it at the very first place. After doing, repeated mistakes, I got to learn this. So whatever you are being said, or whenever you are somebody is addressing you, do not mind or do not, avoid or do not ignore to write down to,
Mhm.
maintain proper notes. That is
Okay.
first thing.
Okay.
Maintain proper notes, and because you might it might look like as if you are doing something, uh, that are not anyway done to these days. No, it is not like that. It is like we were doing that time, we also have to do this time now these days also,
Yeah.
because if you will miss any of the thing, then you do not know what you are going to do in your work, like, because at least you will be having some evidence, some note or some document at your hand, at your discretion, that you can refer them back. So do make note of, do make a
Okay.
good document out of it. And second thing is, like, whenever you communication, just do whenever you are coming up with a doubt, draft an email to your, maybe first, at the first place you can do it with your senior members. And if you are directly coordinating with your other stakeholders, do keep a like email communication with, because that will not only document whatever is going on, also there will be, you can save yourself from many unforeseen mistakes that might happen in the future. So
Yeah.
when you will email, do that through email or any kind of, like, email is the only form of communication that we do across, like, other stakeholders. So do that, and it will save a lot of time, and also you will have a written proof, and everything will be very clear inside your mind that you are going in the right way. So
Okay. So maintain a record, always
yes,
note all the feedback.
yes,
These are the
yes,
things that can be really helpful. Okay, okay, great. So anything else, anything else that you feel inclined to share, just in general for finance and risk aspirants, how you have seen the industry change? What do you feel about how, how the industry is changing now with the growing conversations about AI, ML, about the growing conversations around automations, around around the geopolitics, or anything else, anything that you feel you have observed in the industry, you have observed any changes that you feel that people should be thinking about while planning a career in finance and risk today?
Okay, so we can see, and we were seeing like how AI is taking over in almost all the places, all the industries, or whichever area you can name it. So it goes without saying that we need to keep a tap on how AI is doing in our industry, also in our risk domain as well. Because I see
Yeah,
even inside risk in the group itself, we have several domains like the climate risk. So this is an upcoming. I was
yeah,
really out of curiosity, I started searching like how does climate risk comes inside the banking industry.
yeah,
So it is like I got to find
yeah,
that the industries which are not very environmental friendly, which are not very environmental, like
yeah,
let's say any manufacturing industry, and it
yeah,
releases tons of carbon dioxide. So while
yes,
giving any or disbursing any loan from bank side to that industry, so
yeah,
that becomes the climate, that brings the climate risk for the bank. So we need to keep ourselves updated, like because when in the beginning you asked me like didn't you think about taking CFA or FRM
yeah, yeah,
during that time, which was not, because now these days that has become very prevalent and we are getting to hear very often.
yeah,
So that is the thing, now it is going on everybody's mind, like whether I should go for CFA or FRM, or which one to go first, and like that. But those days it was not the case, but now there are many more upcoming things like AI has come, climate risk, and you can name, there are number of courses like every day we are hearing, and that is coming to the forefront. So we need to keep ourselves updated, and also what is happening when you ask like what is happening in our industry, it is like we need to keep a tap of like how on a daily basis how economy is moving,
yeah,
by reading or going through the economic times. I know it is a like time consume, like it needs some of our from our daily time, it needs a good amount of attention towards that, but then at least it will keep us abreast of, or we can give some of our views on that, and we can also contribute to when it comes to taking a little bit of decision into our work. Unless and until we will not be knowing how the GST is impacting, then how are we going to calculate the any part of our related to the profit and things like that, how we will have a better idea of that. So it is just an example I'm telling, so we need to
okay.
keep ourselves abreast.
See, I, from my interactions with, excuse me, and like you, as he also said, right, that CFA, FRM, or now these days a lot more people know. I believe, and tell me if you feel the same from your experiences, that whatever you are doing, it's really important to understand the concepts. Because if you could acquire CFA or FRM, learn shortcuts or techniques to clear, but you are not clearing your concepts,
Hmm.
then I feel like there are so many people, and it won't make that much of a difference just getting credential. It's more beneficial if you learn the concepts and don't take any shortcuts to clearing, because that is something that will stay with you, and then you need to use that knowledge. Obviously you have the certificate to then upskill yourself in a way that you learn the practical implementation of the theory, right? And you having a tag for any any coursework or any certification, that gives the hiring manager or your colleagues basically a first view into what you are or you might be capable of. But when the real conversation starts, whether it is in the interview or whether you are taking on a challenging project, that is where all your understanding will come into play. Then
Hmm.
you cannot say that, I have FRM, I have CFA, I have so many other upskilling,
Mhm.
but here is the problem in front of me,
Yes, yes,
right?
that's
If I
right.
can solve it, that is the answer,
Yes.
right? Do you anything, that's what I believe, that's what I have observed, you know. and taken recommendations from people. Do you also feel the same?
Yes, like how you are handling, how you are dealing with the your day-to-day problems that are coming up on your work. So if you are able to crack that, if you are able to handle that within that set time period, then you are quite on your way. But unless like otherwise handling or like having that CFA certified, FRM certified doesn't work. I mean, doesn't speak for itself unless you will able to handle your day-to-day work. Definitely,
Yeah.
it adds an advantage. It gives
Yes.
you that first and gives brings that credibility and shows that you are serious about your profession or things like that. But at the
Yeah.
same time, we have to be kind of resourceful towards our what we are doing on the day-to-day basis.
Yeah, rather than treating it as a brand, a brand name
Yes,
associated
yes,
with my
yes.
name, it is
Hmm.
more about, it is a lot of responsibility. If I
Yes,
am saying yes, FRM, then if someone is talking to me, then fine, I should sound like a financial risk manager who
yes,
knows the concepts, who can
yes,
solve real world problems,
yes,
right? So I think, yeah, that is so. Like I always say that CFA FRM curriculum are also great, but if
yes,
you really pick those and really understand those and learn the implementations, I think that's what
yes,
can really help you in your career. And then of course, like you said, what helped you the most is, like you said, you did financial modeling project, like got a hands-on experience, and that time you probably didn't have FRM or CFA, right? So
no,
you got hands-on experience, and at Credit Suisse you were able to show that and have a conversation in the interview and show that,
yes,
even though there is not maybe much experience in this domain, but I have a working knowledge, I have hands-on experience, ask me a question. And that's where you nailed the question, and nothing matters after that, no
yes,
matter how many credentials you have, right? That's what you said.
yes,
Okay, yeah, I mean, this is great. Especially your journey. This journey, I believe, it's really beneficial for a lot of people. Like I said, right, because you have taken the path which will be taken by different people coming from different backgrounds in different ways, right? And hearing about the best things that you liked at each of your role, some of the recommendations which are often overlooked, like you said, taking notes, making sure that the feedback that is given to you, you are taking that into account. Because if once it's given to you, let's say by someone who's at a director or partner level, that person is expecting that that's it. And if you are not writing down, it's a human tendency to forget 8 out of not forget, remember 8 out of 10 things, let's say. You will miss two
yes,
things, you will miss one thing.
yes,
So, and that
yes.
can basically spoil the entire effort that you put on a project, because just because of missing one thing, the entire project doesn't make sense or can't go forward,
Yes.
right? So yeah, these are really great learnings. Anything else? Thank you for staying for so long and really, really humbly answering transparently all the questions and sharing your experience. Anything on the closing note that you have for, let's say, we have viewers who are maybe in college in second year, maybe some viewers are doing masters, maybe some viewers are working in market risk and are looking to get into credit risk. Maybe some viewers are in retail banking right now and they want to follow the same path as you. Anything you want to share before we close?
Okay. So, like, if you want to come to the credit risk side, irrespective of wherever you are currently now, so just look at what is happening in the space, what is happening in the space, and how you can bring a link between them and where your exact interest lies in. And I'm sure you will find at least one, if not
Okay.
many, and start with that one.
Yeah.
Let's say you are in market risk, and which is like interest risk related thing. Market risk, if I try to bring a link between credit risk and market risk, then it is market risk is directly related to your interest risk, interest rate. And here in credit risk is based on interest rate. So here I found the linking factor is interest rate, and my
Okay.
interest maybe currently because I am working in market risk, but I want to also learn the credit risk. So that is my next jump that I am looking forward for. And here I found the link in between. Now I want to develop on that, and how I can like convince, how I can explore more about the common area between the two, and how I can showcase that how even being in market risk area, I can be beneficial to, I can contribute to credit risk, and how I can, with having both the knowledges in hand, like having being experienced in market risk and having a fair idea and a very great inclination towards credit risk, I can add a great value in that field too.
Okay, okay, great. So basically, what you are saying is key again, whatever experience you are having, and like you know, in the beginning, you said a really nice learning you shared, which was reverse engineering. Knowing what are the things they are working on, then relating that to what you know so far, and then
Yes.
reverse engineering how to if you were to get to that point from this position, what are the steps you need to take. I think that's a great way, honestly. I think that is something that everyone should do in what they aspire to achieve. Look at where you want to go, look at where you are right now, spot the difference, and fill those gaps. I think
Yes. Yes.
that is something that summarizes everything in the career journey, even in personal life. If you want to, I don't know, run a marathon or climb a mountain, you won't be doing that on day one. Gotta take baby steps. you know
Yes. Yes.
First learn to walk for 1 kilometer, then learn to run for 2 kilometers, then learn to run for 10. I guess that's the same here. So yeah, thank you so much, once again, for sharing your experience and this time. And all the viewers, if you are watching and you have any questions, please drop in the comments. Those of you who are in the Riskin community, we are now over 2,000 members globally. And I think many of you already know Biswarupa in the community. You can drop questions here or you can drop questions there if you want to learn anything specific, maybe about your experience, right? And we can try to get back to people. Yeah.
Thank you so much. Even I enjoyed the talking. I didn't get a feel of the time, how much it has been spent from, I mean, till now. But then it was definitely worth of, getting to know, getting to talk to you and sharing the experience. Definitely.
Okay. Thank you so much. Okay.
Thank
Bye.
you. Bye. Yeah. Good night.